All right, we're going. Very happy to have here on a Sunday my buddy Larry Lepard, who was kind enough to, on a whim, talk to me. And we've got a lot of things to discuss today. First off, how are you, sir? It's been a long time since we've
I'm
talked to
doing
each other.
great. It has been a while. We got a lot to discuss. We got to get it in before the Phillies game. So
The Phillies, you mean the
not
Eagles?
the Phillies. What am I talking about? The Eagles. Yeah, my bad.
The Phillies game, we got about 4 months.
Yeah, I'm mixing up my Philadelphia sports teams. I'm an idiot.
We would be okay. You're a Patriots fan, though, right?
Yeah, I am, and it's been
Yeah,
fun.
they look pretty good this year.
Who would have thought, right? This guy's a great quarterback.
Yeah, it's worked out good for you guys. We'll see how they do in the playoffs. So
yeah, I'm worried, but hey, look, if it takes us a few years, that's okay.
And probably better than anybody expected this year, right?
Oh, much better. Yeah. And I think he's got a shot at the MVP, don't you think? I don't know.
Yeah, he looks pretty good.
Yeah. So it's fun watching. Let's say that. When Brady was gone, I thought, okay, this is over for some time, but here we are. We're back kind of in the game. So
yeah, the Mac Jones era was not too much fun.
That was painful. Very painful.
All right, listen. So here's where I'm going to start it. I'm going to start it with our little online disagreement that we had a couple of days ago, which was when I posted a chart of Euro Pacific Gold Fund versus MicroStrategy year to date. I don't know if you remember that on Twitter. It showed, Peter Schiff up 140% and Saylor down 43%. And you took exception to the fact that, like all these other fucking Bitcoiners, which, by the way, I own Bitcoin. I hope you guys are all right. I'll be rich if you guys are all right. I really do. But having said that, there's a difference, I think, between owning something and also disclosing what I believe is the necessary disclaimers and skepticism surrounding it versus owning something and claiming it's going to be the end all be all no matter what. And that's where I'm different from a lot of Bitcoin people, because they always ask me, "Oh, are you sure you're long? Because you're not out there just blindly touting it."
No,
so
my
first thing is my first thing is you took exception with the fact that I put up a year-to-date chart.
Right. Yeah, and only because if you're going to do that, you got to look at it on a 5-year or 10-year basis. But I hear.
But you don't.
I think your reply was, yeah, but everybody in the business manages things year to date. You're right. I mean, that's a fair point. Obviously Bitcoiners are a rabid bunch, and I'm one of them. But I've always talked about the risks. I mean, it has drawdowns on a regular basis, and if people stop adopting it, it's going nowhere. But everything I see says the adoption's continuing, and it's pretty interesting to me right now. I was Peter Spina. I don't know if you know him. He's a gold stock guy, and he doesn't like Bitcoin, although he owned it way back when, made a lot of money on it, and then he thought it got captured, so he gave up on it. And he and I so we have a friendly debate back and forth on X, and I was saying to him, Bitcoin today feels like gold stocks in 2023, which was, frankly, the pits for gold stocks.
Right.
And isn't it interesting? I mean, back then, all the Bitcoiners, including me, others were saying, hey, gold and silver are behind, Bitcoin's winning, Bitcoin's going to crush these things. And I kind of was, I didn't entirely believe that, because I knew they were both forms of sound money. I thought there were a few more puffs in the cigar, this old, gold and silver cigar. And when people go to sound money, they're going to go to those first because they're better understood. And I think a lot of Bitcoiners kind of disagreed with me on that. But I still held 30% of my stuff, my net worth was in those gold things. And the only reason Bitcoin had gotten so large is because I bought it so long ago and it went up a lot. But, and to be frank, I mean, these gold stocks and gold surprised me this year. They've done better than I thought. And, that's gotten reweighted. Now I'm about 55% gold, 45% Bitcoin, because the gold shit's gone up so much. So, and it's interesting just the way the momentum and the psychology, shifts to, I've got Bitcoin guys saying, well, Jesus, maybe I should buy gold and silver right now. I'm like, you kind of missed it. You know what I mean? I actually think if I had a new dollar and I was trying to think which is a cheaper on a relative basis to go into today, I would say Bitcoin and MicroStrategy are relatively cheaper than gold and silver mining stocks, which is not to say I don't like them both and I own them both. So, they trend back and forth. There's a really nice chart. I can't put it up. I don't have it at my fingertips. It shows, Bitcoin and gold terms. And, we're right at the bottom of but we broke through a lower trend line. Then you had to redraw the trend line again. We're at the real bottom of the range of Bitcoin versus gold. So, if we don't recover here in the next few years, well, then, maybe Luke's right. And Luke Roman has taken the view that, maybe Bitcoin doesn't make it. And, I don't believe that. I think we are going to recover. I think Bitcoin is going to come back and go higher. And I think they're both forms of sound money with very different characteristics, though. One is a more of a risk off, when the world's blowing up, sound money, that's gold. And the other is a much more, liquidity is flowing, risk on sound money, the tech component, and that's Bitcoin. So, it's interesting. It's always fascinating the way psychology in these markets works, right?
Luke Groman has taken the sense that Bitcoin might not make it.
Well, actually, I don't think he said Bitcoin might not make it. I think he's questioning the thesis because of the recent performance, and that's what he said. He said, "Look, it shouldn't be performing this poorly," is kind of what he said. You have to go look at all his stuff and listen to his stuff and his tweets. And he's been a fan of both for a long, long time. But he sold a lot of his Bitcoin thinking that Bitcoin's going to go substantially lower. And, admittedly saying, hey, recently for the last few years, it hasn't been working. And that calls into question the thesis, is it ever going to work again? And, my belief is it will. And, I think they're both going to continue to work. But sometimes one looks better than the other. Right now, gold, silver mining stocks look a whole lot better than Bitcoin in terms of performance. But what that tells me is that means that Bitcoin is a better buy today.
Well, can we just say for the rest of the Bitcoin crowd that it is not crazy to look at something's year-to-date performance? Like, even now you just said, like, well, if you look at that, you have to look at 5 years. It's like, no, you don't. You really don't. Like, everybody compares every financial asset on a year-to-date basis. The only reason that you're saying if you look at it on a year-to-date, you have to look at it on 5 year is because you don't like what the year-to-date chart shows.
Well, no, I think, the semantics, 1 year, 5 years, whatever. Yes, you can look at things in 1 year, but I guess the question, you look at things in a month. You can look at things in a week, right? I think you would agree.
But year-to-date, yes, but year-to-date is a standard essentially in the industry, right?
Yeah,
okay. All right. So it's not like I'm cherry picking when I put that up there.
No, that's fair. I agree with that. It is a standard in the industry, and it's not like you're cherry picking. Gold and gold stocks have crushed Bitcoin on a year-to-date basis. There's no doubt. The point I would make, though, as a counter to that is I don't invest on a year-to-year basis. I invest kind of on a 5 to 10 year basis, and so I think that in an asset as volatile as Bitcoin, good God, there are years that look friggin' awful. The Sam Bankman-Fried thing took us from 68 to 15, and this has always been. And I always say when I'm talking to people who are new to Bitcoin, thinking about getting in, and I think a lot of Bitcoiners make a mistake of not cautioning their friends that they're trying to sell on it, that this thing is unbelievably volatile. And that, yes, over longer periods of time, it has outperformed because it's got an adoption curve that's going on. Under shorter periods of time, you can get crushed, absolutely crushed, which is why, you've got to be either dollar cost averaging or prepared to hodl. And so when people ask me, they say, well, how much should I buy? I said, buy an amount where if it went down 50%, your first inclination would be, oh, it's cheap, I want to buy more, not, oh, I made a mistake, I'm going to sell it. Right.
Yeah, and I was looking at the chart the other day that they post at the end of the year every year, which basically shows 10 or 12 different asset classes: real estate, commodities, Bitcoin, gold, equities, bonds, and it lists the best performing ones to the worst performing ones every year. And then you see over the last 12 years, it's Bitcoin is the best, and then Bitcoin is the worst, and then Bitcoin is the best, and then Bitcoin is the worst. So there's also an argument to be made for your case, which is like, look, every 4 years it does have a terrible year.
Yeah, it's more than every 4 years. It can be a couple years that there's a really good site, put it into Google, called Case for Bitcoin, and that guy keeps real-time running tabs on annual returns of gold, Bitcoin, S&P, and all the way back to Bitcoin's inception. And what you see is there are good years, exceptionally good years, and there are really shitty years. And this is to be expected, Chris. You know this because you've been around this game a long time. When you've got a new thing that's controversial, back in the old days, it was, people were saying Bitcoin's dead. You don't hear that quite so much anymore. There aren't people out there now saying, well, Bitcoin's dead. It's like, well, no, Bitcoin may be losing its luster and it's going to underperform gold. Okay, there's an argument for that. But I mean, Amazon was dead a number of times, and yet Bill Miller, held it. And I mean, it was down 90%, 70%, 50%. There were probably 10 times when it was down 30 to 40%. And in every case, it came back because it was it was the leading network for buying things online. And, it's up 200 and some odd %,000% from inception. So if you believe, that Bitcoin has similar like properties, i.e. it's a network, and it is a protocol that's becoming more widely adopted, which I believe, then, I think over time it's going to trend higher. It's going to be up and to the right. But boy, it's not, it's tough. And I know some Bitcoiners who are really hurting because they expected 140 at the end of this year and they don't have it. And
speaking of up and to the right, yeah, are you looking at the wrong camera? Because I'm right here and you're like looking up.
I don't know. I'm looking at what I think is the right camera.
That's the right one right there. Yeah. Like you're looking like right at, but the whole interview you've been looking up and to the left.
Up, okay. So I'll try and look more up and to the right. I thought I was looking at the
just look straight ahead. I'm straight ahead.
Is that better? Am I more on target there?
Yeah, it's not where you're sitting. You're sitting in the right place. Just your eyes are you're looking up here.
Well, I'm looking at the dot on my computer, but maybe the dot's not in the right place. I don't know. It's weird.
Yeah, that might be it. Anyways, who gives a fuck? I'm just.
Oh, no, it's all right. I'm sorry. Yeah, I don't want to be not looking at you. I'm trying to look at you.
I don't give a shit.
I mean, if I want,
most of these people listen to these things anyways. They don't watch.
Look at you. I would look like this, but I don't know that. Now I'm looking at your face.
The trick is you have to move your browser window underneath the camera that you're using, so that you can look at the camera and the person at the same time.
All right. See, I'm not technologically savvy enough to know how to fucking do that, but
that's okay. Who cares?
Oh, right, yeah. Is that better? Yeah. Maybe that's
better. Okay. Yeah, it really doesn't matter. It's just
you know what? I had my browser window misplaced. All right, here we are. Anyway, I'm an idiot.
So no, it's all right. It's not a big deal. So what I wanted to ask you was Groman's case for it not making it long term is essentially what is it that Bitcoin has already found all of the public buy-in that it can. It's kind of hit that peak with the administration adopting it, and it's just out of runway in terms of adoption. Is that what he's saying?
No, I think no. It's more subtle than that. I think he's saying that it doesn't respond. It's more like he's calling it something more like an equity, and he's saying that in an equity-based environment with risk associated with it, it's going to trade down, and it could be. He also brought up kind of the quantum FUD, which that one does kind of anger me. I think I've done, obviously as big a position as I have in Bitcoin, I've done a lot of work and a lot of reading on that. I'm just not worried about that. It just doesn't concern me at all.
Why aren't you worried about the quantum angle?
Well, because where they stand technologically in developing quantum is so, we're at such an early level of true quantum development. They're like at step 1, and they've got to get to step 1,000 to have it be a risk. And there's actually a workaround being talked about and worked on with, this new protocol, this BIP something or other protocol that they've been floating. And, they will be able to ultimately harden these addresses to be quantum proof. And so I just don't worry about it. I've talked to people who've talked to Saylor and others who are, obviously hugely invested in this, have an enormous, stake in making sure they're right about this. And they tell me they're not worried about it either. So a combination of what I've been able to read and what I've been able to hear from very smart people in the space, truly has me believing that the quantum thing is just FUD. But look, FUD works, and it obviously has got some people think, well, it's not going to be defensible. It's ultimately going to blow up. Okay, fine. I mean, look, I heard this in 2017, not quantum, different stuff. I mean, when there were the forks, and when there were the block size war, the whole block size war, there was a threat that was going to destroy Bitcoin, right? And they sorted it out. Yeah, and it was real. I mean, but they figured it all out, and so I think humans are smart, and I think that'll get solved, I guess is my point.
What do you think about gold and silver? I mean, obviously, look, you run a gold fund. Your fund must be kicking ass this year.
Yeah.
I know you have some Bitcoin in the fund as well, but I know that you're, overweight gold and overweight
Yeah,
silver.
the Bitcoin's modest just because the fund isn't supposed to be a Bitcoin fund. Yeah, we had a good year. We don't have our final numbers, but we think we're up about 160% for the year, which is
Wow. So that's outperforming the miners. It's
we
outperforming
silver.
silver.
We beat our indices. We beat the metals themselves, but not by as much as I'd like. This has been a funny thing. The big companies have done better. The money still hasn't moved to the small companies. We participate a little bit more in the small companies, but I was just starting to write my fourth quarter letter here, Chris, and it's tough. I mean, these things have run a long way, and the natural reaction of any human being who sees the market runs that hard, that fast, says, "Gosh, we're due for a correction. We're due for a retracement." I've got people all over the place saying silver's a parabola and it's going to collapse. I kind of, look, correction, retracement, absolutely all the time. Either one of these things could come back down but I think we're moving into a new reality. I don't think we'll ever see silver.
I think so too.
Below 50.
50. Yeah, that's what I think too.
I mean, it was 50 was a cap for 30 years. We broke through it. Maybe so maybe we come back and test it. It's possible, right? But I mean, I follow Michael Oliver, who I think is a great technical analyst. I follow Andy Scheckman. I follow Ed Steer, a bunch of different guys who, talk about how the tightness in the market, and it's slightly different this time in the sense compared to 08 or 2000 and 2011, and that is because the physical, you just can't print the physical. And
right.
With the Hunt brothers, they changed the rules, so that one doesn't count. Throw that one out. And in 11, they kind of changed the rules too. They increased the margins so much, and there wasn't physical tightness the way there is today. And the thing that really surprises me today is just, you see the price in Dubai is, $95 an ounce, or the price in Shanghai is
yeah,
80 something dollars an ounce, when our price is in the 70s. And you're thinking, somebody's paying up to get this metal. And,
right.
And we know, and it doesn't surprise me, because we've known that there's been a structural supply deficit for 4 or 5 years. We've known that there's just an enormous amount of paper silver. It always amazes me, Chris, I'm sure you're aware of this, you've watched it. I mean, we mine 800 million ounces a year, and they trade 150 million ounces in an hour.
Yeah, yep.
I mean, the comics, I'm like, and in a day, they'll trade 2x what we mine in a year. So that much paper silver, compared to the real amount. I mean, it's like the tail is wagging the dog here, right? So they can bomb it, as they did. As it approached 80, I think there were some systematic institutions that were in trouble. There were some signs of that, and it's tough. There's so much noise on Twitter right now. There's this Asian AI guy who's full of shit and lying, and there are all kinds of people. Oh, a bank was in trouble. I mean, it's whenever anything like this happens, it's very hard to find the truth. But the price is actually quoted at exchanges in various parts of the world. Those are, generally speaking, those exchanges are honest, and those prices are true. And what you see is that, there are big premiums being paid for physical. And you've also got, mining executives that I know, one down in South America, the Chinese were at his shop saying, "Hey, we'll pay you $10 over spot if you'll commit for the next 2 years." So they obviously think it's not going down. You've got Samsung went out and bought, all of the next 2 years of production of Silverstorm, and invested $10 million in the company. Said, "Hey, we're going to put $10 million in your company, and we will commit to buy all of your production for the next 2 years." Companies don't do that unless the market's really tight. And so if the market's really tight, then the question,
or they're afraid that the market's going to get really tight.
Well, that too. Yeah, it could be just fear. And so if the market's that tight, then the question becomes, okay, well, so how high up is up? Does 70 clear it? Does 80 clear it? Does 100 clear it? I mean, I've heard people saying 500. Okay, whatever. I can't get there, but we're in the 70s now. I mean, 100 seems pretty doable next year, and Michael Oliver thinks 200 by June. I don't know. He could be right. I mean, he's been right as rain thus far. So
certainly doesn't feel like we've blown off in silver. I don't know why.
I agree with you on that, right?
But Peter Schiff said something on his last podcast, which was, and this is an astute comparison, I think, because people are comparing this run up in silver to the last two blow-offs. I don't know when they were, 80 and 2000 or something. Who the fuck knows? But what he did was he just took the bottom number and divided it into the top number. Right. And each time, silver had gone up, I think it was 8x one time and 10x another time. And so here we kind of started the breakout at, 30, right? And so really to go up 5x, you're talking 150. So I really don't think that we've blown off yet, and by the way, like your points are good also, which is to say nothing of the fact that there's this elephant in the room globally with how China, Russia, India, all the BRICS nations are, obviously actively de-dollarizing, trying to figure out ways outside of the SWIFT system. We've been talking about this shit for years, right? So like we didn't even take time in this interview to say like everybody can kiss our ass because we've been fucking right for the last 2-3 years, that's how we should have opened this interview. Like, we've been talking about this shit for years. Me, you, Andy Scheckman, fucking all of us.
Yeah, and everyone ignored us. We were nuts, right?
Yeah, exactly. And now a year or two later, we're sitting at fucking $4,500 gold and $70 silver, which was just $80 silver. So, with watching all the gold being taken off of COMEX and silver being taken off of COMEX, all the delivery that's being taken, all the backwardation, all the shit like out of whack. I don't know. To me, it feels like we're just not there yet, and it definitely, to your point, feels like a new era. Like it feels like this is just a new era that we've entered, and it kind of feels like the jig's up, man, to be honest with you.
I think that's
for the
right.
US.
I think that's right. Well, on these metals, on the metal manipulation, I think that's definitely right. And I think you're starting to see queuing outside of lines outside of coin shops. You're starting to see the silver ETF. I looked at the volumes there; they're starting to grow. You're seeing gold ETF volume. I mean, people are waking up to this, but my last quarterly report had it in it. I mean, like less than 70% of the population owns zero silver and gold, like zero. And the part that owns more than 1 or 2% is, the part that owns more than 5 or 10%, I mean, it's just guys like us. It's nuts, right? So there are very few of us. And so as all those people start to wake up and they realize this thing's really happening, I mean, you see these Google trends for how to buy silver, how to buy gold. I mean, they've just taken off in the last 3 months because people do respond. They chase price. And so, there'll come a time when they'll be overvalued. And, could we shoot up to 200? Maybe. Then do we correct back to 100? Probably. But, maybe somewhere in here we correct back to 50. I kind of doubt it. It doesn't feel like we've reached the top yet. And I've had a lot of friends reach out to me and say, gosh, this is a parabola. I should short it. And, a couple of Bitcoiners, in fact. And I came back to them. I said, be careful. How high up is up, right? Did you want to short? Remember when Tesla broke out? I mean, Tesla was a real promote and had some things right with it, and some things wrong with it. But remember all the shorts, and you were friends with some of them who, shorted Tesla.
I was one of them.
Yeah, right. I mean, you get run over in these things. I mean, go look at the VW short squeeze. Go look at the GameStop short squeeze. Go look at the Hunt Brothers short. I mean, you can literally get run over. And
nobody knows who's caught off sides right now. No one knows. Right. No one knows what banks, what institution. I read a lot of speculation and bullshit online. Right. The fact is, you don't take a metal that has traded in a range for 30 years and have it fucking almost 3x in 6 months and not have somebody get caught off sides.
I think that's right.
And then the only question is,
remember that Friday when it went up 10% on record volume? Remember that Friday?
Yeah. That was like 2 weeks ago.
Yeah, right. That was like, oh my God, something just broke there. Now we don't know who it was, but somebody was forced into buying that metal no matter what the price was, and that's how it pushed it that hard. And we'll probably find out. There will probably be some bodies floating to the surface. I mean, the commitment of traders reports do show where the ownership lies, and they show the U.S. banks as being balanced, although it's unclear who's got what. But the European banks look to be net short. So it strikes me that there are probably going to be some issues there. And, the Fed swap lines have been drawn down. I mean, who knows if it was to address this issue or not. I mean, and some of it's year-end stuff, but I was just going through things over the weekend and I noticed, the largest draw ever on that new Fed, standing repo facility occurred last week. It was $75 billion. Yeah. I mean, that was like, whoa, that's interesting.
What else is interesting? Yeah. I think that, sorry to interrupt you. I'm sorry.
That's it.
What else is interesting to me is that this is all occurring in a period where the Fed is supposedly tightening. Now, I know the market is telegraphing quantitative easing, and that's why, we're seeing this move, or part of it, I'm sure at least. I think there are things under the surface that are breaking that we don't know about. I do think, like, from a global monetary standpoint, there's some major seismic shifts happening that are also causing this. I do think that there's a tailwind, too, from people expecting the next round of quantitative easing. But I also think that there's a chance that this move is just these markets also catching up to what's happened over the last 10 or 15 years when we saw unprecedented money printing and we really didn't see the price of the metals move. And now that it's showing up in consumer prices and the inflation genie's out of the bottle, it's obvious that the money that we already printed, as you know, which is inflation in and of itself, but has contributed to the CPI inflation, the price increase inflation.
Right.
This could be a catch up to that. And then as we go to the next round of QE, you have written the book called The Big Print. We're talking about, you know, the big print here. It will be bigger. It will be, you know, you're talking $10 trillion going on the Fed's balance sheet, whatever it's going to be in a year. It's going to be obscene. We're at a spot right now where the everyday investor and the everyday American, mostly thanks to Bitcoin, but also thanks to the Fed's actions over the last, 5-10 years, understands monetary policy way more than they did in the 80s, the 90s. You didn't have an average everyday American understand what money printing was back then. Plus, we weren't doing it. But now everybody's kind of in on it. And if you look at the last round that happened during COVID, people were almost joking about it. They were ridiculing the Fed. Just think of what's going to happen this next go round when it is 10 trillion or whatever. I mean, I think there's a case, and don't quote me, but would I be surprised to see gold go from 4,500 to 10,000 during the next easing cycle? I would not be surprised because it's not even in the mainstream yet. It's not even part and parcel with like the Overton window and financial news yet, even though go ahead.
No, I completely agree with you, Chris. I think people are going to be blown away with how high these numbers are going to get. I think gold's going to 10, 20,000. I think silver's going to hundreds, 200, 300, 500. And I think Bitcoin's going to hundreds of thousands, someday maybe a million. But all that's in the future. And your point is very well taken because, and we talked about this in our last quarterly report, which I was just reading through. It's just it really just started this fall. I mean, it was in springtime that Doge failed. And then the big, beautiful bill passed. And then the budget deficits didn't get any smaller because the hope was that Trump was going to fix all this shit. And then September came along and boom, gold, a fire got lit under gold. Trump attacked the Federal Reserve. He went after that woman for the mortgage fraud. And then he replaced another reserve person with, the woman or with a guy, Moran, who's a very big dove. And then you saw things like, Muhammad Al-Arian saying, well, we've got a name for this now. It's called the debasement trade. And then you got Morgan Stanley. It's got 7 trillion assets under management. It used to be 60% stocks and 40% bonds. Now it's 60 bonds or 60 stocks, 20 bonds,
20 bonds and 20 gold.
I'm like, what? I fell off
That's
my
crazy.
chair. I fell off my chair. And so think about that. That occurred probably in September, October, something like that. And you know how people move. They don't do things right away. They take time. And I have a couple of friends who are Morgan Stanley brokers. I mean, it's a sad existence, but and they just follow what they're told to do. And I said, well, are you finally putting your people into gold or gold and silver stocks? And like, well, yeah, we're kind of taking 1% weightings or 2% weightings, they're just nibbling at it. And so, if what we're saying, we've been right, and it's being proven now that we've been right. And so people are like, okay, we're only in the first or second inning of being proven right. And some people are saying, well, the game's over. Okay, you're right, but now, sell it all because it's not going to continue. No. These are 5-year trends. These are big, long-term trends. And we really are in the first or second inning of a 9-inning game that may go into extra innings. So, to me, gosh, there's going to be volatility. I mean, that's the thing that's hard. And that's, there will be severe pullbacks. I mean, I was just studying some charts that showed in prior bull markets for gold. I mean, 20 and 30% pullbacks, same with silver, they're very common. And those are going to happen. Yeah. It's going to throw people off the scent, but it's, what's going to happen is the way that people, I think what's ultimately going to happen is the way people have been trained to quote unquote buy the dip with respect to the stock market. You're going to get trained to buy the dip with respect to the precious metals because, people are going to become more and more aware that they cannot stop printing. And, although, it's always 2 steps forward, 1 back. I mean, the tariff income is a good thing. I mean, it's gone up to $30 billion a month. That'll help. Who knows, maybe we're going to keep the price of oil down since Trump just did this thing in Venezuela, which, I think makes a lot of sense. And so, so off we go. I mean, there will be things that will throw a wrench into this trade, but I can't see without a major restructuring of the government system that we have. I can't see them solving the problem.
And if retail investors even just start to allocate, 2, 3, 4% of their portfolios to gold, I mean, it's just going to be such an enormous tailwind that's not there. I mean, it's just been widely ridiculed as an investment for the last 10, 20 years. And now, dating back to 2000, gold's beat the stock market, right? Yeah. So it's like, kiss my ass to everybody over the last 25 years or 10 years or however long we've been doing this that has been saying that, oh, gold's a pet rock, or, doesn't pay a dividend, or all these bullshit things that people that don't understand it and don't understand monetary policy come out. And well, guess what, motherfuckers? Like, since 2000, we've been right now. Okay. Yeah. And honestly, things could accelerate. You just said Morgan Stanley is now recommending 60-20-20 instead of 60-40, right? So there's about 250 trillion to 300 trillion total globally in stocks and bonds. So let's put that at 275. And right now, gold's market cap's about 30 trillion. So globally, so let's put that at 275 trillion. So 20% would be 55 trillion of that, which would be almost the double from here, gold. So you're talking $8,500 gold, just using the back of the envelope bullshit math on Morgan Stanley's figures.
I think that's right. I think it's even better than that, because the gold market cap's about 27 trillion. You got to remember, probably 20% of that's in museums and antiquities, and we're not going to melt down Tut's tomb, and another 30% of it is on women's necks in India, China, and America. It's jewelry, all of which, by the way, could become supply. I mean, at a high enough price, people will start melting down their jewelry. But if you really look at available bullion to purchase, it's maybe half of the total. So there's 10 trillion, 15 trillion of available coins.
And plus it'll overshoot the mark, probably.
It'll overshoot the mark and all that the usual stuff. But yes, I mean, we still have, like I say, I think second, third inning is a very good way, in my view, of looking at it. And it is a secular trend. And here's another thing, Chris. I mean, because I know you and I are on the same camp on this. I mean, the stock market's an energizer bunny, and it does seem to keep on going. And it does represent a way of protecting against debasement, because you're owning a share of a company that will have pricing power and whatever the new currency is. But, boy, it's priced for perfection. And if for some reason something were to tip that upside down, and the stock market weren't working, as an example, and then gold and silver stocks are working. I mean, Wall Street does nothing if not chase performance.
Yeah, correct. Yep.
In fact, they're gonna have a hard time this year. I mean, if anyone actually looks at their statements and says, "Well, that's great. I'm in the Mag 7, I'm in the Triple Q, whatever. I'm up 20%. I appreciate that." But my friend over here who had the gold indices is up 100. Do we have any of that? Well, no, you don't. Why not? And so that broker's got to answer that question.
And that happens on a lagging,
it takes time.
It'll be people 6 months from now looking back at last year's returns,
exactly,
saying, "Oh, it was the best performing asset of 2025. Maybe I should allocate a little."
Exactly. And it's funny though, because one of the things that's a negative for gold is the way it's so feast and famine, and because it's gone so far so fast. I mean, I can't tell you how many people who I've been preaching to for years, decades really, who are now like, "Oh my God, you're right. I can't do it. I'm too late." Do you know what I mean?
Yeah.
I'm too late.
Yeah, when really, again, this could just be us catching up to the last 10 years.
Well, that's what I try to point out. That it's really, you're not too late. And this is the way this game works. I mean, gold, there are a lot of times when you don't need gold. I mean, if you have a productive growing business that's, gaining market share, increasing margins, doing all the good stuff, expanding its PE, I mean, that's a better investment than gold in most circumstances. But when you've got a very, very severely monetarily screwed up thing like what we've got right now, gold just totally kicks ass. and that's what it's doing. And I wouldn't, you don't short it, because until it stops kicking ass, you assume it'll keep kicking ass. So
what do you think about, I want to ask you about equities, but first I just want to ask you about palladium and platinum, which were two things that I pointed out heading into 2026 that I actually own, am scaling into more so as I kind of lighten up a little bit on the senior miners and start looking more into the junior miners. I'm also taking some of that capital and moving it into platinum and palladium just because they're so, off. One of them is, the other one is, I can't remember which one, but one of them is I think its platinum is further away from its all-time high than the other ones.
Yeah.
So it has,
Yeah,
what do you make of?
I love them both. I love them both. I mean, it's not the mandate of my fund because they tend to, they're a little like silver, and they have, they are precious metals, but they're also industrial metals that get used. But I love them both, and I think look, I mean, this, in my opinion, this next 10 years is going to be quote unquote the decade of commodities. I mean, this is, you and I were,
I agree,
younger, but it's much like the 70s where, and I mean, the one commodity that really hasn't started to move yet is oil, and that's just because there's a lot of it around. Right. But even oil, I know that was one of the themes of, because I subscribed to your letter, that was one of the themes of your letter, which is, the oil stuff is very cheap, and it is. And if we're right about this commodity bull market, that's going to change. And so, I'm with you. I'm watching all those things very carefully, but I, because I manage a precious metals fund, that's really my primary focus. And so I haven't dug deep into the uranium or the platinum or the copper. I mean, look, copper's worked really well. I mean, I've got a copper ETF in my IRA, and it's I think it's up 50 or 60% this year. It's been great. I mean, so look, we have underinvested in stuff, mining capacity stuff. Tavi Costa has great charts on this who just show, and that's the other thing. I mean, the Bitcoiners will say, well, yeah, these prices are going up, but guess what? We're going to mine a bunch more gold. We're going to mine there's going to be a supply, and there's going to be all kinds of new supply. That's not how it works.
Not really, yeah.
That's just not how it works. I mean, if you look at how hard it is to find a deposit and turn it into a mine that's producing a metal, that's a 10-year process. And we've been underinvesting in this market for 25 plus years. So even if these prices go up really high, really quickly, when we try and turn on the taps, they're not going to start flowing metal for 10 years. So,
yeah. And that's part of the reason that in my letter for 2026, I took out the GDX, I took out the SIL, all the different gold and silver miners I had for 2025, which I thought were all great, and I still own some of them. But that's why going into this next year, I actually recommended EPGFX, which is Peter Schiff's gold fund managed by Adrian Day. Not because he's my friend, which he is, and the fees are large in that fund compared to other funds too, but because that fund is stock full of convertible debt, they have warrants, they have options, and they went in a lot of things that haven't even moved yet that they own from like junior miners that could potentially, like you're talking about, become buyout targets. Absolutely. As we start to discover that supply isn't as robust as people think. And so I actually thought, like, okay, like here's a way to kind of define our risk a little bit more going into this next year. The major miners, by all means, like I've held on to them. I still own the GDX. I still own a bunch of miners. I lightened up slightly on the GDX. I lightened up slightly on some of my silver miners, but not a ton. But then also the addition of this EPGFX, because I want that call option like exposure to the juniors. Adrian's
a great guy, and that's a good fund. And yes, you're right. I mean, the juniors, I mean, I specialize in the juniors as well, and the money hasn't really gotten down there yet. It's, right now we've got big institutional money, and they're going to go buy Agnico because it's a leading major, right? They're not going to buy my little crummy, small stock. But, my little crummy small stock, I mean, one thing about these majors, that the problem they have, like say you're Newmont, for example, you're mining 5 million ounces a year. Well, you've got to find 5 million new ounces every year, or else you're a shrinking business.
Right.
Yep. And they can't really do it. I mean, they have a hard time doing it. So what they've got to do is they've got to come around and find these little companies that I bought. Like, I've got a company, I'll just give a shout out because the woman who runs it's a great lady, called Banyan Gold. I mean, it's got 10 million ounces up in the Yukon. And, I mean, these majors are trading at, $300, $400, $500 per ounce in the ground. I mean, she's trading right now at like $30 or $40 per ounce in the ground, right? And so, one of these majors is going to have to say, oh shit. I mean, her name is Tara, and Tara's been digging this shit up for 10 years. She's got 10 million ounces. That's a big deposit, right?
And you can pay double the market cap and still make a great margin.
More. And she's going to make them. She's going to make them pay that because she owns enough of it. And the Sprott owns it. The stock's in smart hands. So we're going to force, when the major comes and says, we need more gold. We don't have it. Okay, well, let's go buy some. Fine. Let's find a junior that's got a ton of it. Well, this one's got 10 million as a safe jurisdiction. let's go pay up for it. And so, yeah, it'll be, a 3 or 4 bagger from here. So yes, the juniors will get it. And you're right, the GDX and the GDXJ, I mean, they've really gotten to be, even the GDXJ, which used to be the junior index.
Yeah, it's got a lot of majors in it.
They're all big companies in there now.
Yeah.
I mean, if you go, but
it does have some.
If you print it out, I mean, all the small guys have fallen out of that. They've gone to the big names. So
let's just see what the top holdings are now, just for my own edification. Pan American Silver is number 1. Okay, so I mean, that's 7% of assets is Pan American Silver. So I mean, I don't consider them a junior, right?
No.
Equinox, Alamos, Royal Gold, Hecla, I Am Gold. So, let me ask you about equities real quick. I don't know if you read my letter, but my stance coming into this year was the bear case is essentially that, hey, we may get a molecule of common sense at some point, and people are going to realize that, sanity will prevail or math will prevail somewhere in some industry. Something will go tits up and take part of the market down with it. I don't know if it's subprime auto or if there's going to be some fraud out there that nobody knows about yet. But essentially at 40 times, Schiller PE of 40x right now, market cap to GDP, historical price to earnings ratio, any way that you want to measure the market right now, it is at all-time highs, not nominally, valuation-wise. It is the most expensive and the most aggressively priced it has ever been. And so the bear case is, hey, we get some semblance of common sense somewhere, or something breaks and blows up and we have a sharp deleveraging before the Fed comes in again. And the bull case is essentially the best that I can see it. The bull case to own the S&P this year is that things are just different. The market is, when you're looking back at historical price to earnings ratios and looking back on a market that traded at 8, 10, 12 times earnings during recessions, during bear markets, you're mostly looking back at a market before quantitative easing took hold in 2000, right? So you're averaging out, 80 years of the Dow Jones before we had the money printer, with the last 20 years, which have greatly distorted the averages and the means and the medians and what have you. So for me, I guess the bull case is, it is just different because the market is fundamentally different. It's driven only by liquidity. It's not driven by the economy. It's not driven by the macroeconomic data. Liquidity is the only thing that matters. And maybe 40x is still the peak, or maybe 50x will be the peak for earnings, but a reversion to the mean or a dip will now look like 18 or 25 times earnings, which is sick to say, but it could be the truth. So what do you think about equities in general? You lean more bearish or bullish there?
Well, I lean more bearish. I think you've touched on something, though, that is really important for people to understand, and that is, it is a new and different world where, and Greenspan started this, and it just got worse and worse. And my book kind of chronicles that, of how, the equity market's kind of a policy tool. I mean, it's almost like they can't have stocks go down, or else tax receipts will go down and the deficits will blow out. Everything will go down. And so, I mean, the bad news is we've got big inflation. The good news is they've rigged the market to go up so that if you can at least get in the market, you can kind of, sort of, maybe protect you.
Keep pace, right?
Keep pace, yeah. And so that's kind of, we're now just living in a world where everything's inflating, including the stock market. So I guess what I would kind of describe it, I'm sure you're familiar with the term crack up boom. I would kind of describe it as we're in a little bit of a mild crack up boom where monetary policy has been set to make sure that all number goes up over time, right? Because the alternative is just so scary and unacceptable. And that's all fine as long as they can keep the inflation in check. And, to their credit, they've actually kept it, I mean, it's not really in check, but, they've held it together better than I thought they would. But I think that when you look at some of the charts that show how tight things are getting, and you consider the fact that here in the fourth quarter, they really did pivot. I mean, they try and claim they did, and they're calling it reserve management, but that's horseshit. It's just QE, right? They are, they're wiring it to continue to go up. So, woe be it for me to buy puts. In the last 10 years, probably the biggest mistake I've made was not understanding that and buying too many puts and losing money on all of them.
Mm-hmm.
And so now that I've given up, okay, now the market can go down because I've capitulated. But in this kind of a system, I think you pointed to something very important. Kind of a switch got flipped, and things are a bit different. And this is a different system, and you have to recognize that. Now, that doesn't mean there couldn't be some outside factor that could really mess things up, a war or a sector blowing up, or maybe just really high inflation. Right, they've managed to keep inflation, other than the COVID incident where it was very high briefly, they put it back in the can. Really high inflation is really bad for stocks. I mean, if it truly breaks out in a big way.
Yeah.
And, so if they're forced into a big print, which I think they're going to be, I think this 40 billion a month is not going to be enough. It's going to be, there's going to have to be more. And as there is more, that's going to creep into the inflation. And we'll be at what I think the metals are smelling too, Chris. I'm sure you've thought this through. They're smelling the fact that Powell's out of there in May, and that we've got. And Trump has basically said over and over again, whoever the new Fed chairman is, we're
going to zero.
Well, 1, 2, something lower, and that'll lead to a whole raft of housing refis. And don't get me wrong, it'll be stimulative. That's for sure. Did you hear Trump say something about how, I want to see 20, 25% GDP growth? Well, you can get that if you have 15% inflation or 20%.
Right, yeah, it's very easy.
It's very easy, but you can't get nominal growth. We're not going to have 25% more cars and goods and services. So
you mean real growth?
Yeah, I'm sorry, that's what I meant. Yeah, you can't get real growth. Yeah, is what I meant. And so, it's this brave new world that we live in. And I think that they're going to, I guess what's the new meme that's kind of developed recently is they're going to run it hot. They're going to bring rates down. They're going to, the good news is probably unemployment won't be allowed to go up. They'll just keep everything cooking. There'll be jobs for everybody, et cetera, et cetera. That's the good news. The bad news is there's not going to be any relief on inflation. Hamburgers going to $15 a pound. Someday when oil starts to get more accurately priced, gasoline will be higher. Sadly, I think, we're all going to continue to get eaten alive by inflation because that money spigot has to flow to keep the stock market going. They're directly related, and you can't have one without the other.
100%. And when they were talking about the Michael Dell accounts, the $250 for kids, Bill Ackman made some kind of post that was just like, it's a great idea, and the miracle of compounding will save us all. Which, is an astute observation, but it just made me think how much we rely on the assumption that we're going to be able to compound at 7% per year in equities. And you have all these pension funds with all these, and not just pension funds, a lot of the passive funds too have gone out and taken on debt to meet redemptions, or a lot of the pension funds sold bonds years back to reinvest because they weren't meeting, paying these CIOs to come in who were underperforming. The market was up, 8 or 10% these years, and they were only doing 5% or 6%. Right. So the assumption that the compounding is going to continue ad infinitum it's layered into the cake, and they're going to do anything they can to keep that going, because then shit really starts to break structurally. If we have two minus 10% years in the S&P. Could you imagine being down 10% 2 years in a row in the S&P? Being 2027 and the S&P's at 5,000 in 2 years, it would be like hell on earth.
Exactly. I think there's another thing you touched on that I think is very important we haven't really gone into yet. The bond market, right? So So let's look at the Japanese 10-year and what's going on there. Let's look at the German 10-year, what's going on there. Let's look at our 10-year, if you look at it on a 30-year basis, and how it broke out after COVID. It broke out, and it's now kind of doing a nice little flag, kind of a triangular flag at 410 or something. The screwy in this thing, in this deal, the way they've rigged it, based on what we just described, are these bondholders. If we really are going to continually run 6 to 7% inflation, which is what I believe the underlying rate of M2 growth is, and therefore it's what inflation is.
The long end is toast.
Why would you ever own a long bond? And so we got to roll these bonds over constantly. And eventually these bondholders are just going to revolt and go, no mas, I'm not doing it. And that's where the real problem begins, because
that's where you lose the dollar.
Yeah, you lose everything because if interest rates go up, this country can't live with 5 to 10% interest rates. We just can't. Everyone's way too levered. And so the Fed will have to step in with yield curve control, and they'll say, okay, bondholders, that's fine. We're going to cap these yields at 4.5%. And the entire bond market is going to look at the Fed and go,
sold to you.
Sold to you.
Yep.
Right.
Yep.
And the bond market is a $37 trillion market, and the Fed balance sheet is 6.5. Right. And so, if the entire bond market says sold to you to the Fed, and the Fed prints the money to buy it, that's going to be inflation that's going to blow your socks off. So, just because it hasn't happened yet doesn't mean it won't happen. And I really feel like that's what's in our future. We are going to have a very, very, people think inflation's bad. And yes, 9% inflation at the peak of the COVID thing was very, very bad. But sadly, I don't think we've seen anything yet. I think it's going to get worse, much worse. And that's
it's not just. Oh, sorry. Go ahead.
No, that's it. That's why protecting yourself in shit they can't print.
Right.
Gold, silver, Bitcoin, mining stocks. That's why you got to do it, right? So.
And it's not just the inflation too; it's the loss of confidence that goes with it too. And also one of the things I wrote about recently. I'd love your take on this. Is do you think gold and silver are kind of sniffing out the fact that the macroeconomic data now really can't be relied on too much? I wouldn't. Would you put it past the Trump administration to not fuck with the CPI numbers? I wouldn't.
No,
so
the employment number. Look, they're fucking with every number, and everybody knows that. The whole damn system is so FUBAR. I'll tell you, to me, and I tweeted this, and maybe it was hyperbole on my part, but I think the Nick Shirley video was like the shot heard around the world. You know what I'm talking about, right?
Yeah, the Somali fraud, right?
Yeah, I just like
the daycares.
Holy shit!
$9 billion.
Yeah, this thing is just so damn broken. Do you know what I mean? Everywhere it's broken. Everywhere there's fraud. The numbers aren't real. It's just the whole thing is government's like a criminal operation, just doing bad shit. And Trump's in there fighting and trying to fix it. God bless him for trying, but I don't know how far he can get. And so, there were people saying, well, if this is what our money's being spent on, why should we even pay taxes? I don't think they're going to have a successful tax revolt, but the point is that I think more and more people are coming to the view. You and I have always known that the mainstream is lying to us, right? That the mainstream media is lying to us, and that's why you have your channel, and people watch you and they know they get an honest take on things, not always right, but honest. And same with the videos I do and so forth. And I think more and more people are just going to come to the view that, God, we're getting screwed left, right, and center. We've got to find alternatives, and gold and silver really are the alternative.
It's fucking sick. It's absolutely sickening. Seriously though, I don't know how much longer it's going to take for people to understand this. And look, I pay my taxes. I don't like it, but I pay my taxes. I want to stay on the right side of the law.
Me too.
I'm not going to be participating in a tax revolt or any of that shit. But what I will say is, it is fucking sick to see these gross misuses of billions of dollars. We saw it when Doge come in and they were talking about USAID and all this other stuff. What Stacey Abrams from Georgia gets $2 billion that she's going to manage to help people, who need it, buy new refrigerators. There's no checks and balances on this shit. Nobody's going through the accounting journal entries on these things. There is so much fucking money being fraudulently passed on, in this case in Minnesota, to a bunch of fucking illegal immigrants, okay? Half these people are here illegally. They're running fake businesses. They're walking around with designer sunglasses on. And fucking, I got Uber drivers here in Philadelphia that are getting shaken down for $20 Venmo payments, which is just fucking sick. It's absolutely sick. And then you have an entire party of politicians who the Laffer curve is completely foreign to them. They don't understand at all how taxes could possibly be regressive. They think the government is a great capital allocator. It's just perverse. Yes. Somebody just asked me I did this interview with the Epoch Times the other day. And the guy said, what's your take on taxes? And I said, my take is less taxes are probably going to create a more vibrant economy. That's it. Why? Simple reason. The government is not good at allocating capital. That's it. Look at the post office versus FedEx. There's a million different examples. The government can't fucking do anything efficiently. They can do the bare minimum necessary to maintain whatever it is that they're supposed to do while giving contracts to their cronies and, you know, putting up it's like SEPTA here in Philly. Sorry, I'm going on a rant here, but like, you know, the subway system is fucking disgusting in Philadelphia. You have drug addicts all over the place. It smells like piss and shit.
Oh.
It's dangerous. I would never let my daughter or my son or my girlfriend or anybody that I care about ride the subway. I've been riding the subway for 20 years. So I have a basis for comparison. It's the same subway cars as 20 years ago.
Oh.
It is horrific. So this last year, they do a spruce up, right? Did they replace the subway cars? No. Did they put more transit cops down there? No. Did they deal with the crime and the fucking drug use? No. You know what they did? New signs. We're going to rename the Market Frankfurt line the L1. Okay, so they gave the train a new name and put a new sign and some new signs on the fucking subway stations, and that's it. Same fucking shitty subway station, same fucking drug addicts laying on the ground, same trains that can't fucking get there on time. I down there 2 weeks ago, oh, we got a shortage of drivers. That's what government does, okay? They fucking do the bare minimum to make it look as though they're doing something, and that's it. So the idea that, like, this money is going to these people and, you know, every time somebody hits a fucking $1,200 jackpot at a casino in Las Vegas, they're issued a tax statement because the government needs to make sure they get their $300 from them, or every Venmo payment. It's just sick. It's sick. It's perverse. It's micromanaging. It's regressive. It's counterintuitive. And it's absolutely ridiculous.
No, you don't have to convince me. It's very, very bad.
And now we can print it, right, Larry? So now you got everybody thinks like, oh, well, we can just print, what is it, $3 trillion in tax receipts?
Yeah. I mean, that's the notion. I mean, and that's probably what they'll do. I mean, you know, and the minute and guys who are in some ways doing a lot of things right are also, they're not even thinking correctly. I mean, you know, so we haven't even come close to balancing the budget, and Trump is saying, well, you know, maybe we'll give out a dividend check for, you know, the revenue that we got out of the, out of the tariffs. So
tariffs, yeah.
Hang on a second, dude. You know, I mean, okay, you can do that, but it's inflationary. I mean, look, it's a messed up system, and you know, here we are. We didn't set it up. You didn't set it up. I didn't set it up, but we're living with it, and all we can try and do is live with it as best we can. I think if we vote to, support people who believe in sound money, and we put our assets into sound money, and we try and, you know, grow our wealth through sound money, then we're in a better position to influence, you know, the things so that our kids don't have to live with it. And that's, you know, in my case, my contribution, I try to write the book to explain it, because I thought the average American, sadly, is working 3 jobs, doesn't have any time to think about anything, doesn't understand why they're being screwed. And, you know, it's a pretty sophisticated theft that they pulled off. I mean, it's kind of a collusion between the government, the bankers, and the Fed. You know, those 3 groups got together, and every single one of those 3 groups gets what they want. The bankers have a great business model. Heads we win, tails you lose. The government gets all kinds of power, and the Fed gets to parade around like they're geniuses when they're really idiots. So,
yeah, I was in DC one year when they were doing like the IMF like World Summit, whatever the fuck it was called. Yeah. You know, I never seen so many fucking Bentleys and Rolexes, and you know, the IMF, this great globalist organization that's supposed to just be looking out for me and you, Larry. Let me tell you something, brother. I saw a room full of these people. They were staying at the hotel that I was staying at. We have nothing in common with these fucking people, and they don't give a fuck about us. Okay, I could tell just by looking at them. Yeah,
no, that's absolutely for sure. But that's, you know, that's just the way of the world as it is today, and you know, not nothing we can do about it. We know what to do about it, and we're doing it, and that's the best we can do. And I mean, I think, you know, your channel, your Substack, which I noticed, by the way, you're like one of the top ones. You're one of the top Substacks in finance, which I thought was really impressive. You know, what else can we do, right? I mean, in my case, I wrote a book, and I'm out there, you know, on the speaking circuit trying to hammer this message home, you know, and I don't know, you know, never know when it'll catch. I mean, I keep hoping I really haven't gone viral. You know, there's a small group of people who know me in the sound money world. You know, I would love for this message to get more viral. You know, I mean, We got to get Rogan
Wow.
to get you. We'll get Rogan to get you on, or get Rogan to get me on, or something. I mean, it's just like,
Yeah, or Dave Collum or something. It doesn't matter. Whichever one of us gets on first.
yeah.
Hey, if I make it, we all make it. All right.
Well,
I'll
that's
be
right.
dropping your fucking name left and right. Andy Sheckman. I mean, you guys are the people that taught me everything I know, anyways. So
same. Colin is fantastic. He made it to Tucker, and he made some ground there. But
he did.
Yeah, but he's fabulous. But it's hard. It's an uphill battle. But I will say this: as you pointed out earlier, people are waking up to it. People, I mean, and say whatever you like about Bitcoin plus or minus. I know you're a general supporter of it. I mean, the one thing that Bitcoin did that I really was pleased about when it came along and Safe wrote his book was I got a bunch of 20 and 30-year-olds quoting Austrian economists to me. You know what I mean? It's kind of like
that.
Wow.
I love this too.
I love that. It's kind of like, wow, I mean, okay, so they don't get gold and silver. They think they're old, blah, 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 boomer rocks. I get it. But at least they absorbed the book and they absorbed the message of, and that and The Creature. I mean, The Creature was just such a classic book, from Jekyll Island, as you know. I mean, to have the younger generations read and understand how corrupt our monetary system has become, that's really the key to the whole thing. Because if we can drain that thing, we can stop a lot of problems, in my opinion. A lot of these politicians, a lot of the bad shit that's going down, it's funded by this system. That's and the system perpetuates it, right? So
yeah. My last question. I have one more question. You can be as brief as you'd like. But do you think that the administration, and specifically Scott Bessent and some of the people that he's surrounded himself with, because I know Bessent's a sound money guy. I know he's a gold guy. I know he understands what's going on in the gold market, even though he won't admit it publicly. Andrew Ross Sorkin asked him what's going on with gold, and he said, "Well, more buyers than sellers." It's like, bitch, the fucking answer.
Come on, man. Yeah.
But do you think, final question here, do you think that the administration is going to, or is already in the process of actively doing something to try to secure the dollar or tether bonds to gold, or, just generally increase the integrity of the money, or no?
Yeah, that's a great question. I think stated another way, I think your question is kind of, are they going to do a monetary reset during the Trump?
Right. That's exactly what I'm saying.
Yeah. And I've thought about that a lot. I mean, so Andy Sheckman says that Judy Shelton told him that she met with Trump, and Trump said to her, "Hey, Judy, a gold-backed treasury bond, we really like that idea. Maybe that's the kind of thing we should do in 2026, at the 250th anniversary sort of thing." And so, and we know Bessent has said things like, the monetary system is broken and there needs to be some kind of an adjustment, very similar to what happened at Bretton Woods. And when that happens, I want to be at the table. Well, that's a big clue. Okay. Now, yeah, right. So yeah, I think it's within the realm of possibility. But it's and I think they probably view themselves as having the power to do it, mainly because they're bold. They just do shit. I mean, look at what they just did in Venezuela. These guys are bold. And other presidents have been bold. I mean, Nixon was bold when he just said, "Well, screw it, we're off the gold standard." Roosevelt was, I mean, it's wrong, but he was bold. I mean, Roosevelt, same story. We're grabbing the gold. Lincoln, we're losing this war. We're going to print greenbacks. So, yeah, I think there's some possibility. Now, the question is, they're going to need cover to do it. Is the high inflation that cover? I don't know. And will they pull the trigger? I mean, one thing I could see happening is, okay, so we're further on. We're only 1 year into the Trump deal, right? So we got 3 more years to go. So now we're 3 years deeper. Inflation's higher, and I think they're going to do the calculus of, are we likely, is J.D. Vance going to be the next president, or is the other team going to win? And I think if the other team's going to win, it's like now or never. We either got to do this now, or they're going to take us down into a socialist hell. And so they'll probably try and do it. I hope so. I guess the answer is, I don't know, but I hope and I pray so. It's gonna require real courage. But to be frank, they've shown that. I mean, these guys have shown that they're willing to do gutsy shit. And
true.
And so yeah, I mean, maybe they will. I mean, I guess that's kind of where I'm at.
I've heard the idea of the 250-year celebratory bond backed by gold. I've heard that from more than one place. I heard it from Sheckman and Shelton, which is the same place you heard from, but that does seem to be getting tossed around a lot.
Yeah. And, and they're trying to do, I mean, they've obviously done this thing with, the stable coins and so forth. And that's a place to try and park money. And, I mean, that's a whole different discussion. We don't go there. Let's not go there now because it takes too long. But the point is, I think they understand how broken things are, and but doing a reset. I mean, Chris, as a practical matter, let's just think that through. It's a one-time enormously inflationary event. I mean,
right. Yep.
It's somebody's. You cannot do a reset without somebody losing, and the loser is the holder of the treasury bonds, and it's inflation everywhere. But then and so the way it has to be sold is, look, folks, this is going to hurt a lot, but after we do it, things are going to be good again. And so the question is, what are the conditions that allow them to do that and get away with it, and not
high inflation, right?
Yeah, I think super high inflation. I mean, I think that, sadly, the way things are playing, that's likely to be the case. I mean, we went to 9% this last inflation. I think we're going to 11, 12, 13, 14, 15. I mean, to me, this is looking so much like the 70s, where you had these waves of inflation. And so I think, if inflation persists, I mean, right now people are hurting from inflation. It's the number one, and it was in my quarterly newsletter, my last one. That's the number one concern of the people in the country. What is your major concern? I mean, it's like by a lot. Rising prices and the cost of living is the number one concern of the country right now. And so if that continues and grows, there's going to come a point in time where people are going to demand, look, God damn it, I'm dying. We got to do something about this. And, and so hopefully, they'll have the courage to do it. I mean, I just don't know. What's a little discouraging is that some of the sound money people who've, pushed for cutting back expenses and other things, guys like Thomas Massey or Rand Paul or Warren Davidson, not Davidson as much, have just been eviscerated by Trump. Do you know what I mean?
Yeah.
So, it's messy, I guess is the answer to it all. It's very messy. And will they have the courage and the ability to do it? I don't know. I hope so. I pray that they will, but I'm not sure that they will. We'll just have to see.
Yeah. All right. Well, Larry, hey, man, thanks so much for taking an hour for my subscribers and my listeners, man.
Always enjoy talking to Chris. And
and we'll look forward to your letter next week. I know, listen, my subscribers love reading your letter. I get such great positive feedback on it.
Oh, thank you.
Every quarter we can put it out. So on behalf of them, thanks for continuing to allow us to publish that.
Oh, no problem.
It's just great to talk to you, brother. Hope I get to see you in person next time.
Yeah, I'm sure. Well, I'll come through New York and we'll go over to PubKey.
All right, that sounds good, brother.
Okay.
All right, Larry Lepard, thank you so much, my man.
Thank you. Take care.
Take care.